Good morning, everyone. Welcome to our Tuesday morning trading room. Get the screen share going on here. All right. Let's take a look here at yesterday's session. And before I point out what happened yesterday, note where we're trading right now relative to yesterday's close. We got a little bit of a gap right there. All right, yesterday the lows holding, which was a little bit of a surprise. Well, maybe for me it was a little bit of a surprise. When I'm looking at this is what I see. I see a breakout, I see a retest, and I see the market trying to recover the trend. So yesterday's lows, very important. If we get below there, it looks as though the market will probably head lower, try to get back down toward the bottom end of this trading range, maybe do a trend line test. So plenty of room to move to the short side. But if the market gets above the highs, we've got a trend. We've got the market at least going to try to retest the contract highs. Given all that, it's no surprise that yesterday's day was very neutral overall. And here we are today, trading within yesterday's range, although I do believe those highs depicted by yesterday's bar actually occurred in the overnight, not in the day session. If we take a look now at the Eagle, which gives us a pretty good perspective, you can see a nice little rally here actually as the Asian markets opened. That was a quick rally too. If you check your timestamps here at the bottom, all that occurred within about a minute. So the Asian markets opened and boom, up went the NASDAQ, and then it kind of settled in. So I guess what I'm saying when I look at that, I see a bit of a sideways market still. So Aspen wrote me yesterday and asked about settings for different markets. Let me build a new chart here and I will show you what to do about this. Okay, just a second. I can't do two things at once. Oh shoot, I was leaning against my mute button. I was sharing all this valuable information. All right, let me start again. Aspen wrote me the other day and asked about settings on your chart. And people agonize over the settings on their charts. It's probably the email I get most often. What settings should I use for this? What settings should I use for that? Listen, folks, if making money was as easy as finding the right settings for your chart, or the right number for your moving average lines, or the right number for your stochastics, everybody would be making money trading. That's not where the secret lies, and I'm using secret in air quotes. What you want to do when you set up your charts, depending whatever market or markets you're following, is you just want to make sure that you have a decent amount of signals, a decent amount of information, a decent amount of follow through. 99 times out of 100, the default settings will be your go-to. We spent a lot of time doing the default settings. We spent 9 months, kind of like giving birth. We spent 9 months researching the settings. So there's a reason we settled on the settings we did. Now, does that mean you have to stay with those numbers? No, of course not. Maybe you like numbers that make more sense to you. For instance, the NASDAQ trades at $5 a tick. Maybe you want to go with the 10 tick bar, right? 10 times 5 is $50. So, each bar is $50. Maybe you want to go with a 20 tick bar. 20 times 5 is $100. Each bar is going to be $100 or whatever. But the default settings should be your starting point. What you want to do is you want to make sure that you get enough information. And by and large, the defaults will work for most markets trading at $10 a tick or less. Unless the market is not very liquid, like if you're following soybeans, well, soybeans is very liquid, but not very active. Or if the market is trading more than $10 a tick. The biggest culprit, or the most popular culprit, is the E-mini S&P. So here's the E-mini. What you want to pay attention to are your daybreak lines. You want to see how much information am I getting within a session. If I'm going to be sitting here trading, is it going to be worth my while, or am I just going to be watching paint dry? Well, you can see, unlike the NASDAQ, here's the E-mini session. Here, let me go back to the NASDAQ, just so you can see it. Oh, actually, I don't need to, do I? I'll just show you another chart. Okay, so here's the NASDAQ, and we're going to go back to yesterday. All right, so here's your daybreak line. Here's the end of the session. How much activity did you get here? Did you have enough signals? Did the signals have a decent amount of follow through? And all I'm doing is scrolling back here to the open. And you can see that right now we're about 4 or 5 screens from open to close. The signals, when they print, look like they have a decent amount of follow through. Now, that's not the same as saying, is every single signal correct? No, there's going to be other market conditions that determine whether or not you're going to take the signal, trend being paramount to that. But, do the signals print? Do they get decent follow through? And I would have to say yes. So if you're looking at a market and you have 3 or 4 screens during the day, during the session, and the signals have a decent amount of follow through, then the settings are probably good enough. Now, are they going to be perfect? No. Should you tweak them? To your heart's content. Is it going to make a difference? Probably not that much. Now let's compare what's going on with the NASDAQ with the E-mini, which trades at 12.50 a tick. So here's the day break line, here's the session line, and 6:30. This is where the market opened Pacific time. How many signals do you have here? Well, we have about a half a screen. Right? There's the open, there's the close. This is our day. Did the signals work out? Well, that one was okay. You'd probably be looking to avoid counter trend signals anyways. This with trend signal, not so much. You had a couple counter trend signals, but overall you've got 1, 2, 3, 4. You probably wouldn't take the fifth signal because it's going into the closing buzzer. So I would have to say, no, I did not get very many signals with the E-mini using the default settings. So what do we do about that? Well, if we don't get enough signals, we need to speed it up. So we're going to reduce the bar size. We're going to speed up the settings on the Raptor. If we get too many signals, let's say we're looking at a market and we're paging through the market, there's signal after signal after signal after, we can't find the end of the day. We got too many bars or too many screens, too many signals. Your timestamps down here are starting to print by the second. Then you've got too many signals. You need to increase your bar size. Okay, so hopefully you're with me so far. So first thing we're going to do is we're going to change the brick settings. If you're at a loss, a lot of times the best thing to do is to go to extremes. So if you're going to change the brick, don't just change it by a tick, right? Make it a little bit more dramatic so that you can see if you're going the right direction. With the Raptor or the DTS system, the alternate settings are 4, 4, 6. So what we're going to do is we're going to reduce the brick size by 4 ticks. So we're going to make this a 4-tick brick on our data series. So that's automatically going to speed things up for us here. And now we're going to look at our chart and we're going to say, let's go back here now to yesterday's session. Okay, so here is the day break line. And let's find the open. Oh, okay, things are looking a little better. Here's the opening buzzer. Okay, so we got at least 2 screens. We got some signals. We got some follow through. Again, it's not paramount that all the signals work out. We're going to work on that here in a little bit. But we're getting a few more signals, certainly a few more discretionary signals. But the charts don't look right, do they? The charts look funny. What's wrong with my clouds? My clouds are ginormous and all Minecraft-like. That's because the clouds, the indicator itself, is still on the default settings, even though we've introduced a faster bar. So we need to adjust the indicator now to match the rest or the faster bars. So we're going to go to our Raptor. Now, actually, while we're here on the filter, you can speed up the filter as well. Now, remember, I said 4, 4, 6. This is kind of like our starting point. So we're going to increase the Eagle filter to 6. And we're going to go here to the Raptor itself. Now here's the rough relationship between your clouds and your brick size. Your clouds are approximately, your slower cloud is 1.5 times your brick size. Your faster cloud is equal to your brick size. So here's the slower cloud. And you'll notice that the numbers aren't exact. You can play with that as well, but for simplicity's sake, I'm going to make it exact. So our brick size is 4 ticks. 1.5 times 4 ticks is going to be 6. So we'll change that to 6. We'll change that to 6. Here's the faster cloud. Oh, yes. So the faster cloud is the same as our brick size. We're going to change that to 4. Change that to 4. And the hawk bars are going to be the same as our brick size. So we're going to change that to 4. So we have 4, 4, and 6. Equal to 1.5 times our brick size. All right, let's apply that and see how it looks. Oh, okay, that's looking a little more familiar. And let's scroll back now. Okay, so here's our daybreak line. Oh, look at this. We have a number 3 signal, and it appears as though that one worked out. Oh, we have a number 1 signal. It looks as though that one worked out. Number 1 signal, well, if you kept a stop 2 swings back, you would have been okay, because it would have given you heat, but it eventually would have went higher. Or you may have looked at that signal and said, I don't know if there's trend. Maybe I'll take a second push opportunity. But regardless, even if you took it and it didn't work out, remember, the objective is not to filter out every single losing trade. That is something that will never happen. Here's another number 1 signal that worked out. Here's a number 2 signal that worked out. So my point is, all of a sudden, we have signals that are working out, and we have several signals. The market opening right here, and we have a lot of signals, and our charts are looking as they should. So at this point, I would probably say the faster settings are the settings I want to go with for the E-mini. The 4-4-6 settings. So a 4 tick brick, and then the 4-4-6 on your filter and clouds. Do yourself a favor. When you've done that, save yourself a template, so that the next time you load a market and the chart doesn't look right, you can just put the faster template on it, rather than having to rebuild it. Now, like I said, you can play with the settings. You can play with them to your heart's content. You can adjust your clouds. You can adjust your brick sizes. It's one thing about the Raptor. We made it much more tweakable versus the DTS system, which is pretty much locked. All right, so any questions before I delete that chart? I'll give you Hunt and Peck typists a chance to get your questions in. But really, I can't emphasize enough, don't agonize over minutia like, should I have a 4-tick brick or a 5-tick brick? It won't make a difference. This is a 4-tick brick. Let's change it to 5. It's going to look exactly the same. Well, not exactly, obviously, but certainly close enough. Right? Do you discern any difference there? Is there any more information there that you didn't have before? Aspen says, are the default settings there for crude oil and the E-mini? Well, this is the E-mini chart I just went through. You would do the exact same thing for crude oil. Load crude oil, take a look, find your session, start with the defaults that come with the Raptor. So find your session break, and then go back and find the market open. And then take a look at the signals that you get. And take a look at the follow through. Do you at least hit your high probability profit target? Because what we're looking for is when we get a signal, can we take the signal with confidence? And take a moment, and say, okay, here's the signal. Is this a signal I would have taken? And be honest with yourself. Don't say, because you know that the bar went up, don't say, oh yeah, I would have taken the signal right there. I would have covered it right here. I would have put my profit target right up there. Oops. I would have put my profit target right up here. And let's see how that worked out. Oh yeah, look at how smart I am. That kind of analysis does you no good. If you look at the signal, however, and you say, I don't know, it's at quarter to the hour, I'd probably let it pass, and then take a look at the next signal and say, okay, would I have taken that? Oh, I don't know, it doesn't really have a test of the extreme. That's your starting point, right? Because when the signals are unfolding real time, you have to know, okay, here's a number one signal. Am I going to take it? And maybe maybe you've added the Bollinger Band suite to your system, and you can say, yeah, okay, that's in sync with the Bollingers. It looks like I've got an emerging trend. I can cover the trade a reasonable amount of dollars, blah, blah, blah. And yes, that's a trade I would take. So you would do the same thing with crude oil. I've traded crude oil with the fast settings, and I've traded crude oil with the default settings. So both will work. In fact, you can use the fast settings on any market. We can use the fast settings on the NASDAQ if we wanted. It's just we're going to get a bucket full of signals. And on a slower day, it's not so painful, but on a day that's more volatile, you're going to have signals printing so quickly you can't discern them. You can't decide what you want to do. Right? I don't know about you guys, but I still need a minute to think about whether or not I want to take the trade, whether or not I want to put money on it. So I don't want my charts unfolding so quickly that I can't make a decision. Remember, money is not made in the machine gun approach to trading. This is what so many people think. So many people look at our software and they say, "Oh, your your software's junk. Look at all these signals, you know, and they're not going anywhere, because what people expect to see is they expect to see the market, the system print a signal, and then boom, up she goes, right? That's what they expect. And not just one signal. They want a dozen different signals, because they only want to risk $20 on a trade, but they want to make $10,000 on that trade. That's not how it works. But we don't want to find necessarily more signals. We want to find that signal, or those signals that we can take with confidence. So this is the NASDAQ now on the faster settings, and you see how quickly it's unfolding. It would be really difficult to get an order in here, even if you just hit your market, you know, buy or sell the market. One thing about the faster settings, you can see the trade calculator is allowing me 2 contracts because the size, the brick size is smaller. So I hope that makes sense. If you're totally in a fog, go with the defaults. That's always your go-to. I don't care which market you're looking at. If you're totally lost, just stick with the defaults. You won't go too far wrong. Okay, well, that was one way to avoid doing something silly during opening range, and it looks like it may not have been a bad plan. This would have been your first in-sync eagle signal, and they got close to your profit objective. Certainly had enough in there for a swing target, not your trend target, however. And it looks like we're just turning and churning. Market, I don't know, a little bit of bullishness to it. Okay, we got a little bit of back and forth going on here right now. All right, a little bit of a bearish push now back to the median line. Still waiting for something resembling a trend to develop. Another thing that plagues traders is the fear of missing out. That's always a killer. Well, we got a little bit of a mess. I'm debating treating this signal that's printing now as a number 3 signal, even though we technically did not touch the hard edge. And here we go now with the counter trend signal. So it appears as though the sellers may have taken their foot off the gas after a nice little move lower. Here now come the buyers. Decent move higher, decent move lower. We haven't gone anywhere though. We're just retracing the same numbers. Not much really in the way of opportunities here this morning. I guess that number 1 signal, which would have been a little dodgy. I guess the Bollinger Suite was in sync, so you had that. Otherwise, I'm afraid I might have let it pass. And then we had this number 1 signal, which, well, it's struggling a bit. Yeah, Scott says, sleepy market, where's a Trump tweet when you need it? Hello, Don. Can you post something online for me, please? Tom says he's talking to the UN right now. I chuckle because that's not what Tom wrote. Tom wrote yapping, but we'll keep things civil here for now. Well, the lows are holding, so that's interesting. We may get a 232 signal, which I will try. There's the 232 signal, and I'll take it above this high right here of that current bar, and we'll Now, this is a type of trade we could actually leave our exit order in to the short side and almost treat it as a little bit of a sideways trading range. If we come back now with another number 3 signal, then we're going to have a 323, which is a viable sell. But for now, we'll stay with the 232. So we've got a counter trend signal in the number 2 signal, a with trend signal in the number 3 signal, and then another counter trend signal. And now we got the 323. All right, so they're going to take it to the short side. I guess I could have set my stop. Oh, well, let's get a profit order in here. Let's see if they get down toward the lows near the primary support zone. We got my stops at break even because we are 3/4 of the way. There we go. We've hit our swing target. If I were smart, I would take my money now. But let's see if they get just a little bit more. There we go. Come on. We'll cover above there, protect my swing target. Okay, well, that wasn't terrible. Decent setup, the market hesitating a little bit, eventually going back with the trend, which at the, now it looks like a trend, but at the time it didn't look so much like a trend. So we got the trend, which we see in hindsight, we got the consolidation period, and then we got the market continuing with the trend. Trend is muy importante. You got to find the trend, folks. And then once you have the trend, do your best to stay with it. Scott, you're terrible. I've missed Scott's wicked sense of humor. All right. Well, at the moment, well, I don't know. We're still torn, right? I was going to say at the moment it seems like we have a downtrend, but if we look at the daily chart, we're still trading higher than yesterday's range. We're still above that breakout area that we identified. One thing's for certain, as the market progresses back and forth here, it's going to put more pressure on the buyers or the sellers to emerge with some sort of move. Scott says we just took a bounce off of yesterday's primary trading range. and that's very close to our primary support zone, it seems. Okay, quick little move back to the hard edge. Didn't get much of a test of the extreme, so that's what I'd be looking for now. A test of the extreme, a trend change signal. We already have the first micro macro cross signal here on the hawk. We are in the hard edge, so you got to be a little bit cautious. Oh yeah, watch this. As soon as I say something like that, the market will make me look stupid. All right. This now the test of the extreme. Doggone it, you guys. Well, careful what you wish for. We were looking for more volatility. We certainly got it. All right, we got a bit of a second push opportunity on this number 3 signal. It is with trend. It's a very drawn out second push opportunity. We've also got this discretionary signal that we're flirting with. I think I'd feel a little better trading below the recent low. Get my exit order out of the way for now. All right, here we go with the number 3 signal. There we go. Get my stops in a little bit. Maybe I'll put them here at the hard edge. Get ready to take them to break even. Oh, they kissed my profit target and then came back to spank me, you stinkers. here we go again. Another follow-up discretionary style signal. I'll take it below the lows. Get my exit order out of the way. Huh. Sellers seem to have run out of gas. Solid move lower, and now we're starting to get a little bit of candy striping going on. I'm going to close that out before I find myself in a trade I did not intend. We got a serious amount of back and forth. Got a little bit of candy striping. You know, the signals are alternating. We do have a 2-3-2 signal, which is suggestive of the market being a little bit more bullish. I don't want to get too carried away with that, however, because for the most part, we have been in a decline. Oh dear, do I really want to try a counter trend trade just yet? I'm looking at the emerging Bollinger Suite here. It's just starting to get bullish. Well, I do have two counter bars here, so I could use this as my second push opportunity on that number 2 signal. So if we trade above that last little swing high, that will presume that the lows will hold. Why do counter trend trades always have to look so tempting? Oh, All right, there we go. So the number 2 signal, I intended to take it above this high. I entered just a little bit too early, but we'll leave it as it is. Well, I have to leave it as it is. And I'm not going to get too cute with this. If we can get above the highs where I entered, I'm going to become much more aggressive with my stops. And I will take profit on target, even though there's a very good chance the market will try to get back here to the median line, get back to 78, 73. If we can get above the highs and above the hard edge, we will encourage some buying. Here we go. We're above the highs. I'm going to take my stops down here. And now I'm going to get ready at break even-ish. Draw a couple trend lines here to hold the market up, make it good and solid so they can't get through. Last chance for the buyers. Let's go. Okay, I'll take the trade to break even. No, it's counter trend, so I didn't want to give it too much room. I chickened out. It's probably going to head up a little bit here. The Bollingers are in sync. They're favorable. Here, we're going to try it again. We got a discretionary signal printing. It should print somewhere right about there. We've got the warning dots. All right. I got to give the trade a little bit of room because as the clouds try to cross, there's going to be a little bit of a pullback and we will eventually get that number 1 signal printing. I'm just using one of the discretionary signals because I got bumped out of the trade. My number 2 trade. At this point, since the clouds are almost fully crossed, I would start to call the signal that's emerging right now, I would call a early number 1 signal, an early cloud crossover. They're fighting it a bit. Come on, buyers, where'd you go? Well, this next push is going to be very important for the buyers. If they can't get it together, the market is probably going to head lower and check out the bottom end, which will result in a stoppage. Probably going to need a few minutes to sort this out. I'm going to have to close the trading room here shortly. There we go. There we go. One more push. Come on. One more bar. All right. We'll chicken out. Well, hooray. They finally got up there and hit my profit objective, instead of swinging back and taking me out at break even. All right, well, a pretty good morning overall, in spite of the market seesawing a little bit. If you're going to continue to trade, you can't count the sellers out. We saw that a little bit of an upswing, but by and large, the market is in a downtrend. I'd be watching trend lines, because a lot of traders will be watching trend lines. Watch for a break, watch for the reaction, whether the buyers can pick up the market after it breaches the trend line. I'm going to go out on a limb and say they're not going to get it on that first breach, and we're eventually going to see the market come down here. There is a good chance, however, the buyers will recover off of this lower trend line, this much more shallow trend line. All right, gang. Well, be careful out there. I will talk to you again tomorrow. We'll see you then. Bye for now.